For more on this, we're joined by Nour Eldeen Al Hammoury in Abu Dhabi. He's Chief Market Analyst at Equiti Group. Welcome back to the programme, Nour. Now, Asia remains most exposed to the closure of the Hormuz, but despite the escalating tensions, stocks are still rising. Why is that?
Yeah, I mean, you'll have to give the credit for this one to the American administration. The contradictive messaging they've done over the past couple of weeks, or since the beginning of the war, being at least they were very optimistic, and the market is basically pricing in the peace trade, if that's the right way to say it. That this war is not going to continue for a long time. Yesterday, also, the U.S. president continued to send mixed messages. From one side, he's saying he's going to destroy Iran. On the other side, saying we negotiated everything, and it's just basically it should be very quick in Islamabad tomorrow night. So that optimistic, or that optimism through or from the administration is keeping the traders and investors hopeful for a deal, despite the fact that, again, since the beginning of the war, it was supposed to be about 2 weeks. Now we're in week 7 or week 8. And I think at some point, the only thing that can basically turn the momentum around if we don't get a deal over the next couple of days.
Now, gold prices have fallen as much as 10% since the conflict began, with demand actually falling during one of India's key buying festivals. How does the US dollar play into all of this?
At the beginning of the conflict, there was a lot of people were betting on higher gold prices or higher metals because it's safe haven. But at the same time, there's a lot of people missed the idea that you have the real yields going up at the same time the dollar was going up, and everything else was going down except oil. And this is what we call the regime shift from the easy policy into the idea of raising rates again because of the inflation and the risk of stagflation. This is when we saw oil continue to go up, dollar dominated across the board, and silver and gold basically tumbled. Now we are seeing the opposite side. Traders, investors are hopeful for a deal. This pushes the dollar lower, and I think the lower most likely we'll see more declines in the dollar going forward, and will benefit also metals. Most probably, I would say, despite the fact that we are far away from it, but the 6,000 is still in the books, at least maybe by the end of this year.
Meanwhile, the People's Bank of China has kept its interest rate unchanged for an 11th straight month following some strong GDP data last week. How does Beijing remain resilient in the face of global uncertainty?
I think, they're very flexible when it comes to their policies. But we've seen this over the past 2 decades, maybe. They are able to diversify from when it comes to if there's any kind of a crisis, or at the same time if there's any kind of stress, which of course everybody knows that China is relying a lot on oil. But at the same time, their policies were able to at least give them some sort of headwind at the beginning. But at the same time, they're able to manage the risk, and this is what we've seen over the past couple of years. And I think this flexibility will give them even more edge over a lot of other economies, including even I would say the U.S. Despite the fact that this will come also at cost. But they're able to manage it just like how they managed also during COVID, which was even far worse than the current crisis. But at the same time, we should not also forget the lagged effect that's going to happen most probably in the coming months, especially if the Strait of Hormuz continue to be closed. And this will definitely drag on, as you said at the beginning, the fertilizers from one side, cost of living, and also the cost of energy, which will drag into all the economy sector.
We'll leave it there for now. Nour Eldeen Al Hammoury in Abu Dhabi, thank you very much as always.